IVM.
With the ever-increasing cost of living and rising inflation, have you considered the value of 100 rupees? Shopping, eating out, cab fare and all those may seem a little tight in just 100 rupees, but there is one place where your 100 rupees can make a huge difference: Paytm Money. Yes, here you can start investing in mutual funds with an SIP of as little as rupees 100. SIP, that's Systematic Investment Plan, helps you to get into the habit of investing in a systematic and disciplined manner. With each SIP, you get one step closer to your financial goals. Whether you are a first-time investor or an experienced one, SIP can be a great way to invest. So why delay in putting that 100 rupees to its best use ever? Download the Paytm Money app today and start investing in mutual funds with as low as rupees 100 today. Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and my guest today is Sousthav Chakravarthy, founder and CEO at Capital Quotient. Sousthav, welcome to Paisa Vaisa. Thank you so much for taking time for our listeners. I would have loved to have you in the Bombay studio out here, but as you know, we are doing this on online. This time around, we are using Zencaster. And Sousthav, I think you're based in Bangalore, right?
That's right. Thank you, Anupam, for having me on the show.
Fantastic. Let's start from there. What's your background? What have you done? And how did you come to start Capital Quotient? Because, good Lord, I've had so many fintech startups from Bangalore. So tell me your story.
True. So I've been in banking and wealth management for about a decade, more than a decade, in fact. And what I found throughout my entire experience is that we always used to focus on very, very niche clientele, people who have a lot of money and they wanted to earn more. But we've also seen the other side of the equation where a lot of clients were disenchanted with the kind of services they were getting from their bank managers. They would only, talk only very specific products. Not all of them were aligned to their objectives. So the reason I started Capital Quotient back with a couple of other folks that I met while consulting with other startups was basically to address that problem. So early on, we took a investment advisory license from SEBI so that we remain on point. We talk to clients about their requirements. We don't go to them with an agenda for selling any particular product. So we wanted to completely look at a very unbiased way of advisory, and that's basically the driving force behind why we started Capital Quotient.
Fantastic. When I had a look at your website, I like the fact that you've got these nice categories out here. There's like one for salaried employees, one for women, one for business owners, senior citizens, doctors. It's a very, it's a very specific approach. Now, since Capital Quotient is a SEBI registered investment advisor, that's the RIA model. So I'm guessing that your target segment would typically be the middle class, upper middle class, HNI, and I assume here that you charge fees, so when you have a fee model, you have people who would be able to afford you the fees. So we're going to talk about that, but for now, for this first part, I want to talk about, the standout product that I saw that you have, which is a Simply, and we'll come to that later, which is actually focused towards the blue collar and the low income segment. So I know that you started, your RIA service focused on one segment of the market, and that is also there on your website. Mm-hmm. What did you shift your focus here? Because this is not a typical market for RIAs, the blue collar and the low income segment for your Simply product. Talk to us about that.
I think you can say we reached a self-actualization stage very early on. Because yes, you're right, we started with the middle class and the upper middle class segment. It's financially rewarding to help rich people get richer. But from a point of view of trying to do greater good, it doesn't do that much. When we started this company, we said, let's make a change in the ecosystem that we are part of. And like I said, while it is financially rewarding, our clients deeply love us. The fact that, over the last 1 year, despite the market mayhem right now, we don't have a single client who's lost money with us because we pull them out from equities. Yeah, we pulled them out from equities almost a year back. And we've in fact invested some amount when Nifty touched 8,000. We're now waiting to see when we can deploy more. So we've done the right things for these high profile clients. They are very happy, but the two challenges there. One, it has a limitation on scale because it is extremely high touch business. It requires a personal connect, which is very difficult to deliver through technology. And the second is, yes, when we started this, we said we want to change the way India thinks about money. And what we ended up doing is only targeting 2% of the market. So it was, I think, about time that we wanted to focus on the remaining 98%. And for us, with the advent of COVID, essentially what happened is, the whole savings proposition kind of took a front seat once again. If you see, RBI data, India as a country used to save about 30% of our income back, a decade back, and it has been steadily declining. And last year it came down to about, 12 to 15%. I'm sure when we see the data this year, it would have probably come down to single digits. And with so many job cuts, with so many salary cuts, with deferrals on payments, a lot of people are eating into their savings. So it's about time, I think, someone took a step or took a stance saying that, okay, let's help out people to replenish these savings. There's nobody talking to, let's say, a gardener or a maid or a driver or a blue collar workforce who's working odd jobs, or construction worker. There's nobody who's offering them advice, mainly because there's no value there. It's only volume. And that's actually our advantage, because then we can take technology to a whole new level to engage with all these kind of audience. So that's the reason why we wanted to get into this segment. It's more for the upliftment of the society and to bring about a positive change in the country.
Sure. I like that. I like the sound of that, because till now, at least, I haven't spoken to any financial planner or an RIA or even a basic advisor or distributor who looks at this segment. And I strongly believe that the problems that they have with their financial planning are pretty severe. Something that probably us, the more educated white collar guys would not understand. So, okay, now I want to get. So you would have had a lot of conversations with this target audience of yours, the blue collar and the low income guys. Walk us through what you've been hearing from them. What are the specific problems that probably stops them from saving or investing into their goals? I don't know. I'm absolutely blank about this. I would assume that maybe it's lack of knowledge, maybe lack of products, lack of access. I don't know. So walk our listeners through the conversations that you've been having with this very unique set of people, which is a very large volume. I would assume that I don't even know how many of them have a bank account. Let's start from there.
True. Okay, so I'll talk about some of the surveys that we've done. I will also keep referring to this report that came out just a few days back. It was in July. It was done by this company called Pay Nearby. It's the India Savings Behavior Report. And this report actually validated some of the surveys that we have also done, because they've, of course, done the survey at a much grander scale than what we have done. We've done it in pockets like, a specific driver community. We've spoken to, merchants who are, your local kirana stores. We've spoken to construction workers. We've spoken to, tailors, garment workers. So these are the kind of people, but these are in small pockets. So when we saw their report, it kind of validated what our understanding is. So let me summarize and give you some of those deep insights we got from this sector. First and foremost was an alarming thing, which is 70% of the people we surveyed do not have a formal savings mechanism. So what I mean by a formal savings mechanism is, you and I understand the word SIP, and that's one thing that the Mutual Fund Sahi Hai campaign did. It opened up everyone to the concept of doing a systematic investment every month. In that segment, 70% people have not heard, or they don't have a saving mechanism built into their earnings. And when we actually dug a bit deeper, we found why that is so is because roughly about, you can say on an average about 65% of them who gave this response said they don't even have regular cash flows. See, what we do is we take for granted that, okay, for me to set up a 5,000 or a 10,000 or even a 1,000 SIP is easy because I have some visibility on how much money I will earn at the end of the month. But in that segment, 65% of them don't even have visibility on, or they have absolutely no regularity on their cash flows. So for them to structure a formal savings becomes very difficult. And that's something which kind of fed into our product thesis on how we should design a solution. I'll of course come to the solution later, but that was a very strong insight that was there. The second insight that we got is almost half the people, and this is something that even this India Savings Behavior Report said, that about 47% of the respondents said that they need flexibility while saving. They want to be able to increase dynamically. They want to be able to, reduce dynamically. They can change the tenure. They can redeem whenever they want. They can top up whenever they want. So they don't want typical insurance type of product which takes a certain amount of money every month or every quarter. They want complete control in terms of it should be on demand. Whenever they want, they can start it, they stop it, redeem it, top up. All of that should be available at their fingertips. And that's something which India sadly does not have right now, which is a flexible savings program, which stays in line with your earning. So the more you earn, the more you save. And in case if you're earning dips, you can start dipping into your savings as well. No penalties, no clawbacks, none of that. So that's something which came as a second, I would say very strong response that we got from this segment. And the third, which is of course, given the current environment, almost 55% of these people came back and said that they want to be able to save more to manage a COVID-like situation, because suddenly they've realized that a time like this, no government, no company, no friend, family, or neighbor can come and help them in case of an emergency. Everyone needs to have an emergency fund. Predominantly, we've been talking about high net worth people having an emergency fund. Well, emergency is something that does not discriminate between caste, creed, or color. Everyone faces it. So everyone needs to have their own emergency funds in place. Otherwise, who can you bank on at times like this? So about more than half, about 55% of the respondents came back saying we need to be better prepared for our emergencies. And last bit, when you spoke about goals, we think only the middle class or the upper middle class people have goals. A goal is a very broad thing. Even they have goals. Just buying a bag of fertilizer next year is a goal for a farmer, right? Buying a tractor is a goal for a farmer. Buying a vehicle or settling off the loan is a goal for an Uber driver, for instance. So about 65% of these people, they came back and said they want to accumulate their surpluses so that they can meet their short-term and medium-term, objectives. So they are also very, very goal-driven. And that's something which again came as a very significant, validation response for us.
Yeah, this is really very, it's very interesting, the kind of insights that you have out here and what you've said, the three findings that you have. Is there anything else, specifically what you would have said about either, their knowledge, their ability to plan the goals that they have? Because when I see on your website, you've had like 4 pillars of financial success. Get freedom from loans, and I'm sure loans is a very big part of their lives. An Uber driver, for example, might be paying off a loan for his car. There's expenses, there's knowledge, and then there's return. So these are the 4 pillars that are there on your website. So what's your opinion about this target audience of yours, the knowledge that they have? And I'm asking you this because you speak to a broad variety of people, from doctors to salaried employees to an Uber driver. So what's your take on how these guys, who are actually a very important part of our lives also, they approach their financing?
A very interesting question.
Yeah, I'm just talking behavior out here because
they are quite knowledgeable. It's just that their knowledge is aligned to different type of investment avenues. For instance, you and I will have a very limited experience of what a chit fund is, right? But you go and ask a driver or a maid or a gardener, and they would have been investing into chit funds for at least a decade.
Wow, this is seriously interesting, right? Because the people like us would probably look down on a chit fund, whereas from whatever I know, a chit fund actually works really well.
It's a remarkable product. It's the only product in the world where you can simultaneously invest and borrow. There is no other such product. Like, let's say you're doing a mutual fund SIP and you suddenly need access to that money. You can only pull out what you invested, right? In a chit fund, you can pull out even your future investments which you've not yet done. Of course, you have to pay a small interest for it. That's part and parcel of the whole program. But the point is, you can simultaneously invest and borrow. I mean, how neat is that? And I'm surprised that chit is not a concept that has gone global. It is not there in other countries. I mean, that's part of what we are also exploring in the distant future. But I'm just saying, so it's a brilliant product, and for us, it would take us multiple sessions to understand how this works. But in that market, they already understand it, and that's why they are comfortable investing. And a lot of them are informal. So there are private chit groups between drivers. There are private chit groups between kirana shop owners, where they just maintain a register. It's not even a formalized company. It's not registered. It's just among friends and associates. But they're comfortable investing there for these 2 reasons. One is the awareness, and 2 is because they've been doing it for quite some time. Because they've been, unfortunately, while the country has evolved and we have grown, we've somehow left them behind in that. So we've not had an inclusive growth.
Amazing.
And we've
This is,
left them behind. So they had to fend for themselves, right? I mean, why would they get left behind on their own? So they've
yeah.
come up with all their own, mechanisms of coping up among themselves, and I think they've done a fair bit of job. But I think now we need to kind of take it forward from there, and give them more, security. I think that's the least that we could do for them.
Yeah, this itself is such a fascinating topic. I could go on and on, but I'll just end this. The first half on this one question since you brought it up. See, the chit fund. The beauty of the chit fund is it runs purely on trust, and as we know, finance globally runs on trust. But this is a very different level of trust because there's no collateral. A chit fund is just something that you do within a group of people, within a community of people, based on inherent trust that nobody will con the other. Of course, we've had a lot of chit funds also collapsing, but nothing on the scale of some of the bank issues that we've had. So I find it really interesting that that this segment of India has got its finances based on trust, and actually some of it actually works for them. And on the other side, like you just ended your answer with, you've got the organized financial industry, mutual funds, fixed deposits, and all these these concepts that to us might seem very very normal, but
Hmm.
it actually puts a wall of that blocks out a lot of people. In your view, since you talk to both sides, the manufacturers, which is mutual funds, and the BFSI industry, and the clients, do you think that the organized industry even knows how this segment operates, is even interested in doing something for them?
So, from an interest standpoint, I would definitely answer no, because
Okay.
we've had. So, when we launched Simply, the first thing we wanted to do was to offer everyone the ability to have a 100 rupee recurring deposit, right? And that's the lowest possible amount that we could
Mm.
get these people interested with. We said, because see, 100 a month is not something that's big for anyone. Even a blue collar worker who gets, let's say, 6,000, 7,000, they are, contrary to popular belief, they are very very open to trying out new things, right?
Mm.
Provided you give it to them in doses that they like. So we can't go to them with a mutual fund SIP saying, sir, please put 1,000 rupees. 1,000 is 1/6 of their entire earnings, so they're not going to do that. But
Yeah.
if you tell them that, okay, there's an opportunity to invest 100 and gradually build up your experience and awareness and knowledge, definitely they're open to it. But then I should have an opportunity of a product which can start with
Yeah.
100. Now when
Yeah.
I'm trying to incentivize savings, one way to incentivize savings is by making it flexible for them to come into. So I can't even begin to tell you the number of banks we went to door asking them, can you give our user base? So we told them we are trying to do something for the needy. Can you help us build a recurring deposit with a 100 rupee ticket size?
Mm.
Despite the financial inclusion agenda that the government has, we had multiple banks, ramming the doors on our face saying 100 rupee RD is just too small for us. We don't want to get into that segment at all. Everything
Wow.
will be done technology, right? We're built on technology. The
Yeah.
KYC, the account opening, the setting up of the RD, everything, we had the entire back end solution ready. They would just have to enable us to plug it into their system. Even
Mm.
despite that, they refuse, saying, we don't want to look at that segment. So, and I have a lot of data on this. Of course, I cannot take any of the names, but
No,
I
that's
can
fine. That's
definitely tell you that from a broader perspective, no, the market is not ready to accept these people as their common customers, which is why, if you see how many vernacular campaigns have you seen from a bank, right? How many vernacular campaigns on a deposit have you seen from many of the banks? So that just begins to tell you it's not about the fact that these people don't understand English. See, everyone is using a smartphone. The basic Android itself is on English. So we
fine.
have what, 600 million smartphones in the country now, or about 500 million, whatever that number is.
Yeah.
Everyone is using smartphones, so basic awareness of English is already there. um, but the fact is, even for us, when we think, the quite often it happens that we start thinking in our whatever is our mother tongue, because
Mm.
we are comfortable with that. So if anything is explained to them in a language that they can understand and in terms that they can understand, I don't think from a knowledge perspective, or I don't think from an intelligence perspective, they lack much of it and they cannot grasp it. They are extremely open to new suggestions, new ideas. They're ready to try out everything because, see, they have the hunger, right? They
Yeah.
have been deprived for so long that they have the hunger to bring about a change in their life. They don't want. So for instance, a driver does not want his child also to grow up as a driver. So they
Mm.
have that hunger to make a difference in their family. Why would he not look at trying out something with us? The only thing, the two requests that he has is, give it to me in terms that I can understand, and try to use the language that I understand as my native language. If you can do that, I'm ready to start working with you. And that's where I think the bulk of this country has missed it out. We are always designing solutions for the middle class or the upper middle class or maybe the slightly lower middle class, but bulk of the population, it's not an inclusive. I remember one article that Nandan had written that India is not innovating for the next 400 million Indians. We are all innovating for the top 100 million Indians. So yes, there's a lot we can do there. It's just about bringing them on board.
And I'm amazed by the resilience, because I feel that these are the guys who have gone through shocks that I think the best of us would not be able to handle if we didn't have a regular salary or a formal, system that supports us. For example, in 2016 during demonetization, this was a segment that actually went through a lot. And by God, I didn't hear, or at least I didn't see any of them complaining. They just went through it, stood in those lines, didn't say anything, and they just reorganized their entire lives. And there are a lot of stories out there. I think we should, maybe I can do a separate episode just on financial inclusion for the segment that is being left behind. That point that you made on recurring deposit seems even more surprising to me, because this is a deposit. It's not even a loan. I would think that maybe the
bank would get CASA. Yeah, the bank would get CASA, but it's just not.
CASA, yeah. I mean, you just don't want to open the door to that because it's maybe not cost effective or what. And now I think the APIs are also open, so it's not like they have to incur any cost. You're doing all the hard work for them. You'd probably act as some kind of business correspondent and get their money into their accounts. And yet, no, amazing, man, just amazing. So anyway, so folks, that is a wrap on the first part of this episode. My guest is Sousthav Chakravarthy, founder and CEO at Capital Quotient. We spoke about the problem. We spoke about what exactly are the issues out there. The next part of this episode, we're going to talk about the solution. So Sousthav has a very interesting product at Capital Quotient. It's called Simply. We're going to talk about all of that. It's a very interesting conversation, guys. You really want to know more about this, don't go anywhere. We'll be right back.
Hello, everybody. Welcome to another amazing week on the IVM Podcast Network. If you're not following us on social media, please do. We're IVM Podcast on Twitter, Facebook, and Instagram. We'd like to thank our sponsors this week, Paytm Money. So it's been a really, really fun week this week. We've had a great episode with Anand Nilakantha on Cyrus Says. Anand was one of the writers of Bahubali, and he's done some really, really fun stuff since that. Ashish Vidyarthi also had a really good episode on his show, Begin the Journey. Please do check that out. You do know Yuddha is back, right? Definitely check it out if you haven't. Yuddha is our show about Indian ancient warfare. It's hosted by Anirudh Kanisetti and Aditya Ramanathan. Really, really great show. You should check that out for sure. And I forgot, Rishikesh was on the network as well. He was on Absolutely Right with Aditi Surana. Do definitely check that out. With that, let's get you back to the show.
And welcome back to this episode of Paisa Vaisa. My guest today, Sousthav Chakravarthy, founder and CEO at Capital Quotient. On the first part of this episode, we spoke about the specific needs of the blue-collared and the lower-income segments. In this part, we're going to talk about how Capital Quotient actually solves that. So, Sousthav, welcome back. Tell us about the Simply product from Capital Quotient. Tell us its features and how exactly it addresses the very problems that we spoke about in the first half of this episode.
Sure. So the first thing we went about doing with Simply is basically make it available to everyone, whether they have a bank account or not, because within the application we have the functionality to open a bank account for the unbanked sector. Second, it enables savings at a very, very micro value. We've started off with an amount as low as 1 rupee. So anyone wanting to save even a rupee, they can start contributing that towards their savings. And the third is we've completely altered the frequency of the saving. So instead of doing it on a monthly basis or a weekly basis or even a daily basis, we've linked it to transactions. So, picture this, a delivery boy comes and reaches your home to drop a package, and the moment he completes his particular delivery, there is let's say a 1 rupee or a 2 rupee or a 5 rupee, whatever his incentive he's supposed to get. From that, a certain amount gets deducted and saved on his behalf. Or imagine you're taking a ride on a cab. The moment your trip ends, from the amount that you end up paying to the driver, a certain amount gets deducted and gets saved. Typically, what we've seen that since these people do not have a regularity of cash flows, therefore for them, they need to be able to save more when the going is good. And when the going gets tough, they need to be able to bank on those savings amounts. So giving them a structured saving solution where they set aside a certain predefined amount every month really doesn't work. And that's why, like I mentioned earlier, 70% of them don't even have a structured savings program, and that's why half of them came back saying that they needed flexibility. So what the app does is it enables you to save more when you earn more, and when your earnings drop, you can actually pause your savings. You can redeem whatever you saved up to that point in time. You can change the amount dynamically, practically on a daily basis if you want to, and all of those savings you can actually align it towards a particular goal. Even if your goal is just 10 days, 15 days, or let's say end of the month, or if you have a longer term goal, like let's say which is over 6 months, 1 year, 5 years, 10 years, I mean, anything and everything can be supported, but you can save towards that goal. And when you're nearing, when the end is in sight, the app kind of tells you that you're nearing it, and you can then redeem and utilize all your money. So we really wanted to make this a tool available to everyone to basically set aside whenever you get more and more money in your hand. So if you're, let's say, a merchant with a more number of people swiping your ETC machine, or the more number of transactions you record on your POS, end of the day, that much more money gets saved up for you. So it's basically without it hurting you, without it pinching you, you kind of set aside small amounts on a per transaction basis, but it all adds up. And the best part is all of these savings can get deployed into a product that you understand. So the best part is we're not going to ask you to invest all this money forcefully, let's say, into a mutual fund. If you're not comfortable with mutual funds, let's say you want recurring deposits, fair, we will enable recurring deposits for you. If you want to put them into a chit fund, that's also available. Let's say, for instance, you just believe in tangible assets. You just want to buy gold with all the money that you've saved up. Believe it or not, even for an amount of as low as 10 rupees, you can start buying gold every day. So you will see certain tiny fractions of a gram of gold keeping accumulating in your account on a daily basis. So that's the power of going really micro, and that's what Simply does.
Okay, so a couple of things here. One is, how long has this been going? Two, what is the kind of demographic you've reached so far? And three, what are the insights that you've gleaned so far from this? Because this is a fascinating experience. I've never had a conversation about this on my podcast probably till date. So one, like I said, how long have you been doing this? Two, what is the demographic that has come to you so far? And three, any specific insights that you can share with us?
Okay, so from a perspective of how long we've been doing this, is just a recent innovation. We've been firming up the product for the greater part of the last 1 year. We did an offline pilot with about 250 people from this particular segment, predominantly drivers, garment workers, and certain construction people. So we did an early POC. It was not at all technology driven. It was just an offline product, just for us to understand how they work, how they think, the kind of money that they can put in, what do they want to see, what sort of languages they want to understand it in. Do they want more reading material, or do they want to engage with more videos which are in their native tongue? So all of those learnings we picked up for the last 1 year. And Simply as a product went live just about a month and a half back. And since then, we've been doing an online pilot with a couple of companies. We have approached a company to bring on board a certain part of their merchants. So it's a company which offers solutions for an ecosystem of the smaller mom and pop kind of stores, the smaller kirana stores. So with them, we are doing a pilot with merchants who can set aside a certain amount of money at the end of every transaction or at the end of every day. We have also got an early interest from a very large logistics company. They have a whole set of drivers on their platform, and they wanted to enable this option where they said, okay, at the end of every trip, we want them to be able to save some amount of money. So we're doing a pilot there as well. We went ahead and deployed the solution in a garment manufacturer who said, I pay the tailors once in a week, so I want them to be able to invest, say, 5 rupees to 10 rupees at the end of every week. So we're doing a pilot there as well. And now we are on the verge of actually deploying our app on a much larger scale, let's say for about 150, 200,000 odd employees in some larger companies.
Wow.
Yeah. So till now it's been fairly small. Yes.
So now when you mention this, I get that you can actually reach out to large employers of people, at an institution level and get them to do something for their employees. So I get that. So I understand that when it comes to salaried employees, this thing has a lot of potential because there are a lot of labor intensive companies out there, people who employ hundreds or thousands of workers. They would definitely be interested in signing up for your product. Talk to us about the informal labor segment, okay, who are not employed formally by anyone. What about them? Do you have anything in mind for them?
Yes. So we in fact have started or initiated conversations with certain, wallet companies, because even so, one thing that has fundamentally changed in this country is how cash changes hands. So especially after demonetization and after the rapid propagation of all these various apps every person you pick up their phone, you will always find a couple of these wallet companies there. And everyone has become used to the idea of collecting payments digitally. So one of the you can say ideas that we are toying with right now is basically to explore if we can enable at a wallet side, every time, let's say for instance, let's say I am a milk vendor and I supply milk to people's homes, or I'm a newspaper vendor, or let's say I am I have a local kirana shop and I'm doing delivery to various people's homes, and I collect payments, let's say through a particular wallet that I use. Every time money comes into my account, I have instructed my wallet to set aside a certain amount into my savings. Now that of course needs me to be integrated with that wallet, and that's something that we're working on right now. So the informal segment, yes, though they may not be formally employed anywhere, but they are already using established banking and established financial transaction channels for routing their income. Wherever there is a income being routed, we can plug our solution there, so that from the income itself, a small amount keeps getting set aside, so it doesn't hurt them on a day-to-day basis, but a credible amount of savings gets built up for them.
Last question on this part, Simply Product specifically, is what's been your experience with stakeholders? Now, in the first part of the show, you spoke about a slightly disappointing experience with banks and getting them to, open up and allow 100 rupees recurring deposit. But I want to know, when you reach out to, say, the mutual fund industry, or you reach out to the venture capital funds, or you reach out to even, the bigger people out there in the BFSS system, like banks, like insurance companies, or whenever you've had conversations with stakeholders, what's been your experience so far? Just, some ups and downs or anything that you want to share with us?
Sure, absolutely. So the downs typically are that this is a market that nobody's gone after. It's very difficult to get them to trust you. They already have their established, areas where they save. Why would they, look at your platform? You're going as a unknown entity to them. Of course, there are a lot of naysayers, and that's good, because the more people say no, it's better for us. It's an opportunity for us to refine our pitch. It's an opportunity for us to refine our thought process even more, because there's nothing called a bad feedback, right? Every feedback is feedback, and you just have to learn to take it in your stride and take whatever you can learn, to learn from there. So it's not always been positive, but that has actually begun to change, and I think that's the part which COVID has changed, because now, after COVID, we've been talking to certain VCs, and now quite a lot of them are very interested in what we do. They want to explore, they want to, be in touch and see how the adoption of this platform is taking up, how many people continue to transact month on month, how many people are saving. If we can build a business model around this entire proposition, if we can also ensure that we get a small, tiny fraction of income, and then that can rapidly scale up because of volume. So I think most of the VC community is very excited. The ones that we've spoken to are quite excited or thrilled with this idea. They want to now look at indicators that this model is a sustainable model, because, and frankly speaking, we want to build a sustainable model around this, because if we are not able to build a model around this, then I fear many others might get discouraged from doing something for this segment, and that's going to hurt the segment more than, let's say, a bunch of founders who decide to do something about it. If it doesn't work, they can always pivot to the next available idea. But the point is, we would have all lost an opportunity to do some, meaningful value addition to this, underserved society. So I think it's very important from that perspective that we need to start, delivering something which is a sustainable business model. We add value to them. We probably even add value to the corporate who takes this proposition to their employees, and of course, most importantly, it also adds value to us in the process, so that we can build a sustainable and profitable model around this.
Yeah, and I hope to be able to tell your story. Do come back to us. After 3 months, 6 months, whatever. I'd love to have you in the show.
Absolutely.
So tell us something about the other products that you guys have. I noticed on your website you've got something called TYL, which I believe is transforming. Anything else for us that in terms of your products, and of course, tell us about your general view about what you're doing with the finances right now.
Sure. So Transform Your Life was basically more of a endeavor for this segment, which is between a high net worth and between these underserved masses. Transform Your Life was basically for the retail masses, where based on a lot of survey, we found that close to 60% people are struggling with a heavy amount of debt. They have taken credit cards, they've taken loans, and about 60-70% of their monthly income just goes towards funding, all of these loans and, credit card payments. And a lot of them wanted advice on how they could come out from that particular debt trap. The second thing is because of peer pressure, because of family pressure, because of all of that, people end up spending a lot nowadays. See, compared to a decade back to now, earning levels have definitely improved, but so has lifestyle. So people are used to a much better quality of furniture at home, better quality of food. They want to order from the best restaurants, which were earlier used to happen once in a week. Now on a daily basis, people are spending 300, 400 just on a lunch, right? So expenses have gone through the roof. People are finding it difficult to budget and control their expenses, live within their means. And of course, the direct impact of that is the savings are getting affected. So, which is what many people have suddenly realized once they've hit a roadblock with whatever is happening around, the world over right now. So what Transform Your Life does is basically works with people to help them, create a plan to come out of their debt, helps them to control their expenses, and also actually helps them get better returns on their investments. We align it more objectively with their goals so that the investment can actually deliver tangible value towards their goal, and it's not something that they've just done it for the sake of doing it, which is how India broadly invests. You have money, you call someone, they come and help you invest. It's very rarely that you have a conversation about why you're making that investment, when do you want that money, what is the end purpose of that money. We don't engage in those conversations. So Transform Your Life is a very exclusive product for that particular segment, where we can help people come out of debt, get in touch with their expenses and control them, and of course we get better returns from their existing investments.
Understood. So finally, how can our listeners reach out to you? Because I'm sure that some of us might want to do a SIPLI for some of people that they employ. So what's the best way to get to reach out to Cap to get you on board?
So our contact details are all available on the website. Anyone, if there are specific corporates which want to do something for their employees, because trust me, this is when they need you the most, and if you do something for them right now, they're going to remember that, and they will forever have that soft corner for the corporate. So if you want to deploy the solution, it doesn't cost anything to the company or to the people. It's just available for everyone to grab. We can be reached out at contact@siply.in. Siply is spelled as SIPLY. So contact@siply.in. You can drop your messages there. I'd be happy to deploy the solution at any corporate, get people more financially savvy. And by the way, there have been enough number of reports on this. A financially liberated and a financially secured workforce is much more productive because they have lesser financial stresses occupying better part of their intellect. So they can freely contribute to the work. They are going to be much more productive. They will thank the corporate for bringing about a certain change in their life. And we invite corporates to be an enabler for the financial success of their employees.
Fantastic. So folks, you know where to reach out to Sousthav at Capital Quotient, the website. Let me just put that here. The website is capitalquotient.com. That's CAPITALQUOTIENT. And all the social media details of Capital Quotient and of Sousthav are given on the content of this episode. So you just take out your app or wherever you listen to this. You'll find all the details out there. And that is a wrap on this episode of Paisa Vaisa. My guest, Sousthav Chakravarthy, founder and CEO at Capital Quotient. Sousthav, thank you so much for joining us on this really special episode of Paisa Vaisa.
Thank you very much, Anupam, for having me here. It was a pleasure to be part of your show. Thank you.
Listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcasts.com. You can also follow us on our social media. We are at the rate IVM Podcasts on Twitter and Instagram. If you want to reach out to me, I'm your host. I am B50 on Twitter, and thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
Do you wish you were smarter? Well, so do we. But the next best thing?
We could make you sound smarter.
And to help you with this endeavor, we are Simplified, a podcast that attempts to break down the complex world around you with a little knowledge, a lot of poor jokes, and a ton of random trivia.
Episodes out every Monday.
On the IVM Podcast app or wherever you get your podcasts.
See ya!
Namaskar, dear Bandhu. My name is Ashish Vidyarthi. These are truly challenging times, and in these times, we need hope. Do take time to listen to my podcast, Begin the Journey. Available on IVM Podcasts, website, app, or wherever you listen to podcasts. Remember, there is hope because there's one life and we are alive.